Hello and welcome to Macro Mondays, brought to you by David Gokhshtein and the Gokhshtein News Network. I'm your host, Landy, and today is January 5th, 2026. I have to get used to saying 2026. Bitcoin here on the daily. We're going to talk about it. Bitcoin has finally closed a daily candle above a, pretty key weekly closing structure at 93.5 and has started to hit the first area to the upside that we've been talking about, around 94 to 96, with a nice sweep up towards $95,000, just shy on spot here, coming in at 94,825. Now, I know many are excited, but we still need to see Bitcoin recover this area. Specifically, and excuse me, I've been doing a lot of chatting today. 94,640 on the daily. If we haven't already seen a move towards the point of control here at 96 or just above $96,000, then I would be looking for that. Of course, anywhere above there, I'd be looking at the zone of interest between 96 and 98 this weekly right here. Of course, if we do start to see price action inside of this weekly level, it is a level between 98 and 101. With the next big weekly just overhead at 102.5 to a major fib level at around 106.5. So big thing. If Bitcoin can start closing above 101, get above the POC here at just over $96,000 and really start to push into this weekly here between 98 and 101 and then recover above it, and more specifically close a weekly above it, we'll have already seen or will likely see a test into this wider weekly zone overhead, right? Between 102.5 to 112 on the top side, with some key levels in between as well. And that needs to be talked about. We're going to talk about some price action here locally as well, where Bitcoin currently is. But if Bitcoin does push back to the top side here, this is all overhead resistance. So understand that Bitcoin needs to recover these areas of interest, specifically on a weekly time frame. So closing above 93.5, great. Looks good, but doesn't mean too much. Just like closing below 86 didn't really do it, right? We had a nice sweep of the daily closing low structure, and then it was right back into the weekly for some grind sideways above 86 to 89 and swinging above 89 with no closes, right in and around that 90,000, 90,500 area. Like I said, inside there, $2,000 at a time is really kind of what to look for. And that's exactly what we got. Above 90, it was up to 92, and then it was up to 94, essentially, 93.5 to 94. And then above there, we pushed to that area to 94 to 96, 96, 98, so on and so forth. But if Bitcoin, if Bitcoin can recover 98 to 101, now, of course, this is a daily level. It's also a big weekly level. That's when we have to look left, because it's not just the 102.5. That's a weekly level, to that 112, which was the high side consolidation structure. We put in a high above 112 and then came back and retested the point of control area or just above it around 98, right? The top side of this consolidation before the big move down to that 74, 420.69 on spot. Now, there is a lot of, highs in here, right? This is a higher low on the weekly. And then it's pushing into the high side structure that also encompasses this big daily level. You'll see, and you might remember this, when Bitcoin was coming off of 98, it started to put in some structure, right? It needed to get above and close above that 109 even, which we had talked about was right above the high side structure here. We had 108.4 and then 109.360, and we were looking kind of right around that 109 area, kind of splitting the difference. We got that spike, and then a consolidation right at 107 to 108. We then eventually saw Bitcoin go and make some new highs, right? The 123 area was hit. We were looking 123 to 125. We saw 123 get hit, and then a move back down to exactly this area at the 107 to 108. Now that is now a higher low on the weekly. That was the higher low that was holding up this entire topside structure up here for the highs. And this was an area that got hit right after the all-time high came in. We got our 123 to 125 target hit. We even had a swing above 125 to 126, or just over 126 to 126.3 here. Didn't really get any closes above 125 for spot price. And then the big sell-off, the 1010 sell-off all the way down to that weekly level. We even saw Bitcoin pierce through it to the fib. That was a big deal because we rejected, right, recovering above the structure here at, around 116 to 118, and then went right down to test into the fib and broke below the weekly higher low structure at the time, and then rejected the 116 to 118 resistance before coming right back to base on this level. And that's going to be the most important level inside of this big weekly structure up here. So take it one step at a time is really what I'm trying to impart upon you at this point, right? Bitcoin, nice to see it closing above the weekly at 93.5. Needs to get out of the top side structure here, get above the order block candle here, recover that point of control, and then first stage would be recovering 98 to 101. So getting above 101, closing above there, seeing a weekly close above there would start to look really good for the bulls. And then we can start looking up. Now, that doesn't mean that it's going to go in a straight line either. So we do need to talk about what to look for even from right here, right now, or if Bitcoin gets to some of these areas, right? So understand that the big thing that the bulls need to do if they're going to try to run the high side structure is to recover the key low level, the key lows at 107 to 108, and then escape the top side at 112, right? That's really what the bulls need to do. Now, what you would likely see on a push to this 98 to 101 is a lot of shorts covering. Many would say, it's a short squeeze. It's a short squeeze out of the top side here. We saw $200 million in open interest come off the board, or liquidations, or whatever it might be, right? I don't fully trust the liquidation aggregators. A lot of that I do believe is stops being hit as well. I do think that information is aggregated based on some of the data that I look at. But in this case, we'd likely see a lot of shorts covering above 96 into that 98 to 101, and then more aggressive short covering above there that could lead to higher prices. Now it's all about recovering that 107 to 108. Things really do begin to change if Bitcoin can recover that, not just on a daily though, it would have to be a weekly, and then start trading back above that 112 again, not just for the daily, again, for the weekly structure. And I'm going to show you the weekly in just a moment here to kind of really drive this point home. Now from here, all we really need to pay attention to is if Bitcoin does re-enter the big weekly zone here between 93.5 and 86, is coming back down to retest, right? If we did see it either happen from here or higher, if we see Bitcoin trading back below the 93.5, is pay attention to price action that heads back down towards right around the inflection point, which is that higher low in the weekly, where we also saw a lower high on the weekly, right around $89,000 to $90,000, right in that area where Bitcoin was failing to get above on a close, and it kept swinging above, right? So that's going to be kind of a key inflection point within the range. And if we did see that fail, well, then the last, higher low consolidation structures in play right around the $86.5 to $86,000 on the weekly. And you really wouldn't want to see the bulls give that up, especially if it comes locally from right here, right now. So the higher that bulls can push price, the more room they give themselves for a higher low from here. So we have higher highs on a close. We have a nice higher high swing. We need to see higher lows develop from here. And then we need to see wherever this high comes in, whether it's here or higher, get taken out for that confirmation to try to move higher. And in this case, back to the downside, if we did see the 89 to 90 dropped, That's where we looked at 86 and then 83.5 to 84, so on and so forth again, and then possibly even a run back down to 80,000 to 78. Now, right now, for the position that Bitcoin is in, especially on a closing basis for the daily, we do need to watch it for the rest of the week, obviously, and see how things come in and look towards the weekly close on Sunday. Now, all of that being said, let's take a look at a few things here. We have a bullish divergence that's playing out. We are in the bullish control zone. Where is the midline for the RSI? It's going to be right at 89.5. So splitting the difference between 89 and 90. All right, so understand kind of where that is. Back to the bottom side here by the bearish control zone, or the edge of the bearish control zone here, we're looking at around 83,760. So again, right between that 83.5, 84 to 86. So Bitcoin is at a crucial point right now where you likely do want to see Bitcoin continue to rise, and or if it does dip back down, it's just kind of a daily candle, maybe a couple days, put in a higher low, and then try for further upside above the most recent high, right? Or continue to push up from here into that 94 to 96, possibly into 96, 98, 98 to 101. 100K in between that 98 to 101 is going to be key as well, because it is a psychological number. The other thing to look for here is we are starting to get into the overbought zone for a regular stochastic momentum indicator. Doesn't mean much because it is a regular stoch, not a stoch RSI. As long as structure is intact, the last lower side structure around 86.5 here on the daily is still intact. It's fine. It can hang out in that area for momentum on the daily closes. Now, the other thing to look at here is the expansion. And we are getting daily expansion. And I wanted to point this out. Why have I talked about this area to the downside? You want to see, 89 to 90 hold up on any kind of a retrace? Well, that's where the daily basis band is. Excuse me. And you can even see the upper first here, right around 91. Likely going to push up to 92 if Bitcoin closes anywhere above the upper second standard deviation. So this is expansion into the high side structure here, into resistance between 94 and 96. So we do need to see that continuation of expansion above 96 to really start targeting that 98 to 101. And that is going to be kind of it for the daily, in my opinion, for things to look for here. Now, big thing is the weekly, and I want to revisit the weekly for a moment here, as this is a Macro Monday, and kind of talk about the weekly structure as it relates to, what some market sentiment is that you're probably seeing on the timeline. And just remind you that what we had here was an uptrend. We did get a lower high confirmation in that uptrend, and then right back to higher highs before Bitcoin broke down. This is a trend break move to the downside with a complex low. Yes, there is some swing structure in here for swing lower high, swing higher low. We did get the low confirmed coming into this week, right? So on Sunday, we did confirm the low. We need to see closes above on the weekly 94,640 if we hadn't already, if we aren't already running or haven't already run 96 to that 96 to 98, 101 area up here, then I'd be looking for that to occur next. The other big thing is, just to kind of revisit the point from earlier, is we've got that 102.5 to essentially 112 is a big area where there's been a lot of closes. We got a close here on the high at 104.5 to 105. Depending on your chart, we have another close just above the 107 to 108 at 109. This is a big zone, right? So if Bitcoin even recovers 101, you're going to see a lot of people get bullish, but then Bitcoin is entering kind of where the rubber hits the road. And realistically, to even have a chance, the bulls need to recover this last higher low here that was holding up price action at the highs, 107 to 108. And like I said, really take out that 112. And then still not out of the woods. We're looking 116 to 118 is the next big area. Then you've got closes around 119.5 to 120. And then we can start looking back at the highs for a possible run at them. Now, the reality is that this is mean reversion on the weekly. So when I turn on bands again and you look and see where things are starting to line up, well, you have the basis band right at 102.5. So again, be very aware of where things are. This is an expansion to the downside and then mean reversion back to the upside. Nice close open above the lower first standard deviation, but that also gives now room to the downside right into our zone here at that $80,000 to $78,000 on the weeklies here. So this weekly low, which is a lower low, and then the next lower low below it at 78. So just understand the context of what it is that we're seeing for Bitcoin right now. And it doesn't matter what you're trading right now. You should be paying attention to Bitcoin if you're in crypto markets, right? Where Bitcoin goes, the US dollar pairs in general will follow for the rest of the crypto markets. And that's kind of all I really got for you right now. You know, we'll monitor this on the Wednesday check-in. We'll check up on where things are and discuss things a little bit further. Big thing to really pay attention to outside of Bitcoin is the traditional markets. I know a lot of people are paying attention to commodities because commodities have been outperforming for quite some time now. I guess we can take a quick look at those, but we might just have to continue to look at those throughout the rest of the week. Big thing, I think, from here, and I'm going to turn this off just so the chart's a little bit cleaner. Big thing from here for equities markets is going to be seeing how Nasdaq and SPY react, right? So we've talked a bit about this. Dow pushing new highs. It has now come up and it hit our level at 49,000 and went for 49,220. I'd be looking for a little bit more, 49.3 if it continues to push up, and especially get above there. That opens up the $50,000 level, or the 50,000 point level, $50,000 level, whatever you want to call it. Daily looks good, nice breakout above the highs here. Nice close above it, but butted right up against the upper second standard deviation. Need to see a close above here, and then continuation above 49.2 to really start pushing up towards 49.5, 50. So that would look pretty good. Obviously, the bias breaker on that is any closes below the swing here at 47,850 or so. That is really what you got to pay attention to for Dow. Nothing too crazy. NASDAQ did not have quite the same move. We got a little bit of a Mickey D's pattern here, but as long as this low again at 24,650 is holding up, 550 to 650 is holding up, it's fine. Need to see 25.7 to 25.835 taken out to the highs to go run towards the upper second, somewhere around 26,000, and then try to gun for the highs there at 26, 150 to 200. Anywhere above there would put it in expansion territory, targeting 26.5 to 27 over time on the daily. Again, that's contingent on holding up this low down here. I know everybody's going to look at this swing low. Well, below 25,000, then we look to the next low, right? At that 24,650 or so. SPY did move up and swung the upper first standard deviation. So we did get a swing of that. That was right at the high here at 690. I think it did hit, 689.43. For some reason, I thought I hit 690. Above 690, it's 695 to 700 is the play. 695 being the upper second, upper third's right around 700. And again, anywhere below 680, then we just have to keep an eye on that low at 670, 671 or so. Nothing too crazy there. Looking at the weeklies, it's chop. It's chop solidation up towards the upper second. That's where we're looking at 700 or 7,000 if you're looking at SPX or ES1, so futures. And realistically, anywhere below even 685, we're probably headed down towards that 680 and maybe even mean reverting to that 670, which is the basis. When looking at NASDAQ, it's really no different in terms of kind of my outlook from the daily. The basis band is around 24,878, 24,9. And in this area, anywhere below there, we're looking at that 24,650 area, right? And then if it loses that, we're looking all the way down to 24,2 to 24K. Nothing too out of the ordinary. Pretty easy reading charts. Now let's look at commodities. We got gold here on the weekly, hanging on the highs, hanging on the upper first standard deviation, right at that 43.35. And if it can run the 4,500 and get above the highs here, right at this 2,414, I'd be looking for 46, 46.25, maybe even 46.50 on the weekly here. This is a pretty expanded set of bands. If we do see a drop below that 42.75, it's got room to hit that weekly at 42.50 and try to hold up. But I'd be looking back to the 41.50 area and then maybe even down to the basis there at 4K. But realistically, after the higher high, this is pretty much equal lows for the swing structure. Just pay close attention to it around the 4,500 if it does start to push up there by the upper second for the daily. Silver, same kind of thing. Above 70, I've maintained that it has the opportunity to run the highs up to 78 to 80. And then we start looking above there at 80 to 85, encompassing this 1888 up here. You can see that it's around 83.75 in the upper third, starting to push towards 86. I think it'd be fair game at around 85. If it starts to push above there, we can look 88 to 90. Has to hold 70. That's the criteria right now. I do think that there is a wider correction coming up. It's just a matter of, is it going to come from here or higher? First area that I'd be looking for, even if it does push up higher to that upper third around 88 to 90, would be back down below, anywhere below 70. I'd be looking at first to 65 and then 60. From there, it's a pretty quick fall to the mid 50s between the 1.168 and the basis for me, and then many obviously are going to be looking for $50 even. But it's still got juice left to the upside. It is getting overheated, so I think there is a wider correction coming. It's just a matter of if it comes from here or if it comes from higher. And I do think, 90 is in play, obviously, if we see it trade above the highs at 83, 74, 75 area. But I would take it one step at a time, 85 and then, 88 to 90 or so. Could it push significantly above there? There's nothing saying that it can't, but it is starting to get towards the edge of being pretty darn overheated. We do have, a cross down, but within the context of the overbought zone, it can stay here longer than most people can stay solvent. So just keep a very close eye on it. Yes, I'm still aware of the gap between COMEX and Shanghai. At some point, that's going to narrow. It is not demand driven. This is gold and silver. And I want to say this real quick. I know that many people are talking about the demand for silver, especially because silver has been the hot topic lately. But I mean, where was everybody when we were breaking out and people like myself and others were talking about it all the way back here in 24? Or how about back here coming off of, the actual lows in 22, right? When we swung down into the macro structure from, the prior quote unquote cycle, right? Prior to 2020. So, I mean, this is nice and vertical. It's due for a correction. It's just a matter of, is it going to continue to run the highs before that correction and make some slightly higher highs? This is not driven necessarily entirely by demand. Most demand is actually met, believe it or not. I know a lot of people don't think that, but you can go and look at the numbers for yourself. This is primarily driven because of the loss in confidence in fiat systems. Many will just blame the US dollar and the petrodollar and stuff like that. It's loss in the US dollar. That's why gold and silver are going crazy. It's fiat systems in general. Many of the countries that are, hoarding, are not hoarding because their fiat system is all nice and rosy right now. All right. There's also, you have to understand a little bit about what's going on in the bond market, not just here in the United States, but globally as well. So, it's at some point that the if restrictions keep coming into play for certain commodities and REEs, which is rare earth elements, then you're going to see them continue to hold up. That doesn't mean that they can't correct in between, and then continue on later. So, yeah. That's pretty much all I have to say on that. I think that oil is the next big topic. Everybody's talking about Venezuela, and we'll end on this. Look, for them to pull out of the ground and actually get to production is going to take a while. All right. I think 500 to 800,000 barrels per day is wishful thinking anytime soon. Can they ramp up to production over time? Sure. And I think all of us would like to see, the Venezuelan population reap the rewards of that. But it's going to take a while to really get that infrastructure built out, right? And actually start pulling that out of the ground. Just because it's, they sit on the in-ground reserves, that's not production, right? So we'll see where things go, and I would monitor that situation. I think that oil is setting up for a weekly time frame bounce, but understand I'm not looking for like a macro structure change here. Locally, even from the weekly here, which is kind of beat up and showing a bunch of divergences, I'd look to 60 to maybe even 70, being some key areas overhead, right? It's got to get through 60 to even, start plumbing the low 60 to mid 60 region around the upper first and upper second from a weekly standpoint. And it is still in a pretty intense bearish downtrend. Now, if we did see a trend break, where would that occur? It would occur on weekly close above $60.50 right now. So it would still need to push above that upper first around $63 though, to have a shot at the mid 60s and maybe even try to go for 70. Take it one step at a time. Just because you're seeing the news and, they sit on the largest reserves in the world and the United States is trying to grab all their oil. Look, it's going to take years for that infrastructure to be rebuilt. And it's going to, things can ramp up between now and then. It's a situation that right now it's just the very beginnings of negotiations with the vice president who's taken power there, right? And nobody knows what's going to happen. It's all talking points right now. There's nothing actionable, right? So there's nothing that's really shaking up global markets in this regard. Maybe over time. Obviously, there's a lot of excitement for different U.S.-based processors. And you're going to see that kind of excitement and exuberance kind of bleed over there. But understand, your Chevrons of the world are leaving California to go to Texas, right? So there's a lot of things in flux there too. So, just understand that the chart is going to tell you everything you need to know. It's going to be baked in here. And if we do see some downtrend breaks here, many are going to attribute it to, it's the Venezuela thing. And it's like, we'll go look at their output right now, right? Go look at their output and track it over time heading forward, and then try to get a good handle on it from there. Don't just subject yourself to not understanding where things are in reality versus what the narrative is in the news. All right, that's it for me today. You all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. Please like and share this out there. And I'll check back in with you on the Wednesday check-in. With all that being said, Landy out. Take care.